The markets, though, are so forward-looking. Were there some clues that the Fed revealed for the rest of 2025?
Yeah, they did. I mean, every quarter they kind of tell you where they think interest rates may head over the next year. You can't really take it as necessarily a great forecast, but that's what they try to do. And this is a situation where they didn't really know where to go, right? And so you know how you have to make a decision sometimes. You're like, I don't know which way I should go, and so you just decide to do what you did last time, right? And so that's kind of what they said. They said they expect 2 more rate cuts this year, but that's what they said in December. And Jerome Powell, the Federal Reserve Chair, today basically said, almost a rhetorical question, you could have, what number would you write down here? And so it was basically, we're just going to do what we decided to do in the past.
Okay, well, long-term rates affect a lot of consumer borrowing, of course. Have they remained relatively stable in recent weeks?
Yeah, I mean, rates have been bouncing around a little bit, right? And they started coming down, and Nigel mentioned in the previous segment about how mortgage rates for the first time have started to tick up in 9 weeks. But they've been relatively stable here recently. I mean, if you look at 10-year treasuries, they went from like 4.8% all the way down to 4.1, and now we're just kind of hovering here in the 4.2, 4.3% range. And so basically, all that reflected was there's signs that maybe growth is slowing. But we haven't seen that come in the hard data. So you got all that trickle down to, into the low 4s on 10-year treasuries. And then basically it kind of stalled out. So that's a good thing in terms of like we got a little bit lower rates than we did, maybe 6 months ago. But unless the economy really falls apart, it's going to be hard to see rates falling much further.
And we don't expect the economy to fall apart. No. Okay, let's turn to stocks. We have seen some pretty volatile days on Wall Street with everybody wondering about what's happening overseas and what's happening with tariffs. Yes, they're in. No, they're not. What about the Fed's actions? Did they offer anything to kind of soothe the stock market?
They did. Yeah, I mean,
You said you had a nice sigh of relief when you said that.
Oh yeah. I mean, when markets are going up, it's generally a very positive thing, and it's certainly wonderful to see. But we've had markets here that have been more volatile over the last couple of months, and the Nasdaq sold off more than 10% so far, and the S&P was down somewhere in that range. But we got a little bit of relief today because Powell seemed to really project, at least whether it was cautious optimism or not, he seemed to calm people down and say, hey, the economy's still holding up. Yes, the soft data, you see these like consumer confidence numbers, they're not great. But in terms of like what we're actually seeing from hard data, jobless claims, the unemployment rate, all that kind of stuff, it's holding in there. And so he's optimistic that we can continue down that path, and the market certainly cheered that, and you saw stocks kind of go the other way. Most important thing though for people is to always understand that it's important to have your investment strategy in alignment with your goals. That's the most important thing. And so if you're, as I was writing in a newsletter over the weekend, if you're trying to go for a 5% rate of return and you're investing like a 10% rate of return, then you might be taking on some more volatility than you really need. So the key thing is getting in alignment.
Always appreciate that advice. Mike Giordano with Williams Wealth Management. Thank you very much.